the size of asset that lists on Flippa is increasing every month. There was an app sale last month for $35 million. There was a content site that sold yesterday for $5 million.
Wow, that's pretty good. Congratulations on all the success. It's one of the leading sort of places to go when you want to sell your e-commerce store and business.
Yeah, sure is. We're doing really well, growing nicely, and clearly a big market out there to tap into.
Most definitely. How did it come about? Tell me what made you want to sort of start Flippa?
Yeah, so I'm the CEO here. I'm not the founder. I joined the company about 3.5 years ago, but it was founded, as I mentioned, 12 to 13 years back, and spun out of a community environment called SitePoint. SitePoint was an environment for developers, or still is an environment for developers to learn coding skills. And there were a couple of forums playing out at the time. One, the forums enabled people to chat about whatever they wanted to, but one of the things that happened was people were kind of trading source code and smaller websites and starter sites and things like that. And so SitePoint spun out two businesses, one being 99 Designs. 99 Designs recently exited to Vistaprint, but is obviously a very, very large global design community. And the second one was Flippa, which is obviously us. And Flippa's obviously evolved over many, many years, but today it is the number one marketplace to buy and sell online businesses.
That's amazing. Tell me about that process from transitioning as, say, I'm like a founder of a company to then bringing on a CEO. When or why does that happen? Share about that.
Yeah, I think it can happen in various contexts, but in this particular context, excellent marketplace founders have interests in multiple businesses, very, very much have scale and growth DNA, but they get to a point where they feel like the business might be better run if there is someone who is 100% focused on it, and someone who can take their vision, which is often a very big vision, and execute against that vision, taking it from, in our case, which was bootstrapped, profitable, clearly good quality marketplace, into something which is infinitely scalable and with a very big ambition to own the market. And so it really just comes down to, one, timing, and then two, skill set. And so often, founders are of various types, and in this particular case, awesome startup founders, very much 0 to 1, get something humming, and then they want to let somebody else take the reins over and dedicate all of their time and focus to growing it. So in their case, pretty natural. And I think it can probably happen a little bit in a few different ways for different types of organizations.
Interesting. And what would be like a key skill set sort of founders would look in a CEO, and type of experience I would sort of look for?
Probably depends on the stage of the organization. In this context, they were really looking for a growth-orientated CEO. So someone who maybe had experience working for a founder in the past, which I did, had demonstrated that they could take a good quality business and grow it faster than the way it was currently growing. So someone who's got a very holistic understanding of how a business operates, both from a product standpoint, i.e. building for the end customer, all the way through to taking what is probably an organic customer base and growing that through a sales and marketing function. So I don't know, maybe the best description would be an entrepreneur in residence. And so I kind of see myself as, even though I don't have a founder title and clearly don't own the company, they were looking for someone who would operate like they would operate, but with 100% dedicated focus on this asset.
Interesting. And tell me about sort of the endeavors for Flippers. You talk about growth, scale. Are you sort of really building out like a sales team, trying to reach out to sort of do outbound? Like, tell me about the sort of scaling process that you sort of are currently implementing.
Yeah, I mean, what we've done very recently, having just raised a Series A, is built our first sales function in Austin, Texas. And we've also built a marketing team across a multitude of disciplines, including content marketing, obviously video production, things like growth marketing and lifecycle marketing. So all of the different disciplines that you typically wouldn't have when you're bootstrapped, we've now been able to afford us. And as a result, we will have a record-breaking quarter. So we raised the capital in September. And going into this, finishing up March will be a record quarter three on an Australian financial year basis. So, what you tend to do is think about the growth levers that are at your disposal and orientate and prioritize the business around those growth levers. And in our case, we have lots of buyers, so many buyers, it's unbelievable. They come in organically. They've got an extraordinary appetite, big budgets to acquire. And our biggest problem, businesses have many problems, but our biggest problem is how do we fast track acquisitions of the highest quality business owners from all over the world across multiple different business types, e-commerce, content, SaaS, apps. And so what we've orientated to is the sell side. So what do we need to do to bring in more sellers? What do we need to do to talk to more sellers? What do we need to do to engage more sellers and make them feel like Flippa is the right place for them? So they're kind of the initiatives and teams that we've built around Flippa most recently.
Got it. And would there be a bottleneck across the number of people that are looking to sell their stores? And if there's like a Shopify list of 10,000 store owners, you can go through that whole list and only 1% want to sell their business, and then what next?
It's a great question. So I guess there's a couple of comments. The first one is, most of the time the best businesses are established businesses. So you have to be able to segment your funnel by the businesses which are at that stage of their life cycle that makes sense for the buying community. And then it comes down to education and building awareness, because most small business owners don't even know that there's an opportunity to sell, nor do they necessarily want to sell. But a little bit like traditional real estate, like buying an apartment in Sydney, if someone knows that, one, their apartment is worth 20% more than when they paid for it, then they become more motivated. And two, if they realize that they can now do something with that monies, they become even more motivated. And in an online business ownership context, you want to ensure that online business owners understand how much their business is actually worth. So we focus a lot of our attention on helping business owners understand that. So what is my business worth? What is the valuation of my asset? And the other part is education, because if something's only 1 year old or 2 years old, then it's about us talking to that customer now, while fully appreciating that that customer might not be ready to sell today. If we can educate them as to how to scale their business to the point at which they can get the best possible price, then they might be ready for Flippa in 2 to 3 years' time. But, we're talking about a universe of 500 to 600 million digital assets around the world. So, and more digital assets coming into the ecosystem every year. So there's certainly no shortage of assets. And much like traditional real estate, we're talking big dollars here. So, the average business might be worth $50,000. You don't need to sell too many businesses to have a big marketplace. And some businesses are worth on Flippa up to $40 and $50 million. So it really is about democratizing access to the exit. And the exit phenomenon has really only been something that fast growth startups have ever contemplated or thought about or even understood. So we see pin-up boys and girls, everything from Mark Zuckerberg to Melanie Perkins, right? But the reality is most small business owners aren't actually, or that's not their line of sight. They don't orientate their business that way. So what we're saying is the great news is that this is an alternative asset class. There is a network of investors and buyers out there who are just as interested in a business that is worth $50,000 as they are something that is worth $5 billion. In fact, there's far more people interested in something worth $50,000 than there is something worth $5 billion, because it simply comes down to economics. There's only so many people who can get access to fast growth startups, whereas there is a world out there who can afford to buy and invest in online businesses of any sort, size and type.
Is there like a marketplace for people who know how to do e-commerce, knows how to sort of run marketing, Facebook ads, to consistently build and sell e-commerce businesses? Is that a thing that people do?
Build to sell?
Yes.
Yeah. I mean, I think that, a lot of people will absolutely start an e-commerce business knowing that it's not a forever thing. I don't think they say, I build for 6 months to a year and flip. I don't think that's the motivation of the standard customer. That is a use case, but I don't think it's standard. I think the average business owner is building an e-commerce business or writing a food blog because they're interested in the e-commerce business that they've started, or they're interested in the food blog that they run. And that's no different to someone who says they want to open up a cafe or become a tradesman. At the end of the day, they're good at it, they're passionate about it, and they want to excel.
How predictable is sort of e-commerce sort of revenue or profits compared to, like, let's say real estate? You can sort of predict that you're going to get, a monthly sort of rental income. And if you have like a coffee store, you can predict that at least 100 people are going to be walking by it every day. How predictable or consistent are sort of e-commerce businesses?
Most are very predictable. If they're increasing 10% month on month, they tend to increase 10% the next month. If they're decreasing 10% month on month, they tend to decrease 10% the next month. That's why aged assets are the right assets, because predictability is absolutely key for a prospective buyer or investor. Now, of course, it comes down to somebody's capability to run the business. So if something is increasing 10% month on month, and it does that as a result of throwing an incremental 10% more marketing dollars at Facebook month on month, then whoever takes the business over would probably need to continue that initiative or activity. And if they don't know how to do that, then the business probably won't perform to the historical standards. But if a blog is receiving, and that's why different asset types are more passive in nature than others. But if a blog is doing 50,000 unique visitors a month and making $5,000 in AdSense revenue each month, and you take it over, the world doesn't understand that a new business owner has taken it over. They just continue to look for the great, meringue pie recipe.
Yeah.
So they are actually super predictable. It's a viable cash flow option for people. You can buy something today for $50,000 and you can make from that asset anything from $20,000 to $30,000 per annum. So we're talking about a 40 to 60% annualized return on investment. Now, you can't get that through a rental property.
Yeah.
You can't get that through the stock market. Maybe you can get it by buying an NFT, but that's hyper speculative.
And the value of the website it's still there.
So whenever you want to sell it, Yeah.
And it's increasing because as more buyers come into the marketplace, there's greater appreciation for this asset class.
Interesting. How long ago have you guys moved into that blog space? Or have you always been selling blog websites?
We've always been selling most of the asset types that are available on Flippa today. But what is happening is the size of asset that lists on Flippa is increasing every month. So, there was an app sale last month for $35 million.
Wow.
There was a content site that sold yesterday for $5 million. So we've always done it. It's just that the nature of the digital economy and its maturation has seen our average transaction value increase.
Got it. And given that Flippa, you guys are sort of like the middleman of sort of the transaction, where would most of your resources, expenses go to? Would you guys be just putting a lot of your budget towards engineers, marketers, salespeople?
Yeah, most of our cost base is talent, because what we're building is, the investment bank for the 99%. So we're trying to ensure that deals can be run efficiently for both the buy and sell side, for our business owners as much as for our buyers and investors. And that means building a tool set which helps those people to do that really, really safely, transparently, and quickly. So most of it goes into thinking about product and the product that our customers are demanding from us. And so just as an example, the average Flippa business owner might receive in excess of 100 inquiries for their asset. That's difficult to manage. So we're building out basically a deal management CRM for our buyers and sellers to engage with each other really efficiently. Most of the cost base goes to thinking about product and engineering.
Yeah, where have you guys found the best talent around the world? Are most of your engineers located in Australia, or do you guys recruit worldwide?
We recruit worldwide. We go wherever the talent is. We've been heavily distributed from day one prior to the pandemic. So whilst we have two major offices, I'm sitting in one right now in Melbourne. The second major office is in Austin, Texas. We don't have a bias around talent. Clearly, some roles are better suited to one market because there might be accessibility, there might be cost considerations. We might also think that we're better off being able to access each other on the same time zone or for collaborative purposes. I.e., for example, our head of finance, I would always insist on being Melbourne-based because I'm here and I believe that I need to be close to the numbers and we need to consult and collaborate with each other. But that's just an example of where we might bias one location versus another. Similarly, sales, we bias the US for our sales team. And that's just because most of our customer base is currently US-based.
That's amazing. And given that you guys are sort of in a unique sort of industry, most of your talent like working in your office, or do they work at home?
Very different for different people. Personally, I really love the collaborative aspect of our business. And so I come into the office each day because I like to have face-to-face engagements with our staff and the team. But, we have post-sales completion experts and staff located in New Zealand. We have account managers located in Berlin. We have a broker channel manager located in Baltimore, and they're all operating remotely. Our teams have flexible work options. So, we're pretty consistent with the expectations of the world these days.
That's pretty cool. So you guys have a pretty broad sort of team and company all over the world. What's your recruiting process like? Do you guys have like in-house recruiter that's always on Upwork and hiring and just looking for whoever can do the job? Or do you guys sort of use agencies to find good talent? What's your recommendation when it comes to finding great talent?
We have agencies doing engineering and senior talent or executive level talent recruitment. And we have in-house recruiter doing a lot of our sales recruitment for the Austin office.
That's amazing. Another thing I've recently noticed pop up was Shopify. They have now their own marketplace. I don't know how long has it been, if it's been 2-3 years, maybe you can educate me. And has that affected things? Because that's like they have their own vertical integration. It's much easier to sell a Shopify store on Shopify marketplace. What's that experience like?
Yeah, well, I think it's much easier to list. It's not much easier to sell. And that's a very, very clear distinction because buyers don't think about Shopify as a place to buy. So I can list there, but we see that Shopify business owners convert really well on Flippa. We've seen growth in our Shopify universe. So I can't comment to the success or not of that channel. But we have seen multiple Shopify business owners churn from that channel to us on the basis of access to our buyer side.
God, I see. And then you mentioned earlier, and I think that's sort of related to your answer on how you're educating people and telling them that Flippa is a place to buy, and you're talking about how these are investments, buying these sort of digital sort of assets or real estate. With that education process, I guess, how do you sort of put like an ROI to that? Like you can hire, 5 creative people, paying them 60 grand each, you're spending, 300 grand a year, and it might take 3, 4, 5 years for you to see a return on that investment. How do you sort of plan that all out and sort of make sure it's feasible?
Great question. I mean, I think probably the first thing is you've got to buy into the strategy. So you've actually got to believe that by educating your customers in the long run, there's going to be a greater opportunity to convert that into a paying customer, i.e. somebody who ultimately sells their asset on Flippa. So first is belief in the strategy. The second thing is testing the waters and seeing whether there is engagement. So do small business owners actually want to understand what their asset is valued at today? Do they want to register for webinars where we can talk about what it looks like to be a sellable asset and setting yourself up to sell? And so you don't have to invest much to figure out whether there is a community that engages that way. And then you just build some funnel economics around it. If you know that the average business owner that sells on Flippa is 4.5 years old, and you know that you're currently educating businesses that are aged between 1 and 2 years old, you basically watch them over the next couple of years to see whether they eventually convert into paying customers. And from that, you can build a base case. And from that, you can build some expectations around what your talent spend might look like. But I mean, sometimes you've got to place a bet. And I think education is now pretty well founded as a customer engagement and lead generation function.
That's amazing. I love how you sort of know that whole process out and you really understand that, what's the average 4 years, and then you're hitting people 1 to 2 years, and that gives you like a 1 to 2 year leeway of following up and sort of being part of that journey. Are you guys mainly focused on educating sellers or buyers, or is it a bit of both?
Yeah, awesome question. And I think both. I mean, clearly you need to focus. You don't have endless amount of resources. Most of our work right now does go around thinking about the sellers, just because buyers are actually pretty savvy. A lot of buyers have bought multiple assets, so they're reasonably savvy in that regard. But we try not to ignore either side. And it's just a balancing act. We now do new buyer webinars. So anytime a new buyer registers, we ask that new buyer whether they would like to sign up to a webinar. The webinar is obviously free. It's 30 minutes in length. It talks about, how to use Flippa. It talks about the discovery process. It talks about how you get a deal done end to end and tries to summarize and simplify that process for them. So yeah, I mean, in short, you try not to ignore either side of the marketplace.
How do you guys specifically speak to the e-commerce owners that are, 1 to 2 years old? Is it like YouTube making the titles like, yeah, how do you target that specific audience?
We're not as good as we would like to be in that regard. I mean, what we do is look at the lead pool. So when somebody goes and values their asset, we ask them to tell us a little bit about their asset. And obviously, one of the things we ask them, in addition to their financial and operational metrics, we obviously ask them what their business model is. And we obviously ask them when they were founded. And we also tap into open source data to quantify and qualify that. Once we've done that, then you can build the mechanics around talking to them in the right way and understanding who they are. And then, of course, we try to segment our sales team by expertise. So if someone's got a lot of experience working with e-commerce sellers, then we put that e-commerce seller in touch with that person versus someone who might be more apt at talking about SaaS, for instance. So it's just about organizing the data.
Wow, so that education process is not like uploading a video on LinkedIn or YouTube. You guys are educating them directly with their phone number, their emails, and sort of segmenting that list and giving them calls, and you're sort of really educating them one-on-one?
We try to.
Wow. That's super cool. Okay. And then would you guys ever like go down the chain where you guys eventually are now educating people who just started an e-commerce store, or even just educating the everyday person about e-commerce, and if they potentially want to, is that like a later plan down the road, and is it worth, or is that just a too big net and it's not really like, maybe only 1% of people would actually end up selling a store and it's not worth going that far down the chain?
Yeah, I mean, I think you try to push further down the funnel or up the funnel. With every initiative, you're trying to reach a bigger pool, and you try to assess whether that is efficient or not. I mean, in short, yes, I think we would try to do that.
Beautiful. And then one thing I'm really curious about, like, what would be like a sort of KPI that your sort of company strives for when giving customers and sellers the best experience? Is it like, we want to sort of hit X amount of sales per month, and then in order to increase that, we have to give the buyers and seller a better experience by doing X and B, because that would lead to more sales?
Yeah, that. I mean, basically, you have a North Star metric, which in our case is GMV. So that's the measure of how many deals are done, and how many deals are done times by their value. So that's key. But then you look at conversion. So you look at how many of the assets you have actually sell. To some extent, that's the measure of liquidity. So do you have enough buyers? Do you have enough sellers? Are the buyers that you have the right buyers? Are the sellers you have the right sellers? Because we're a matchmaking engine. So we need to think about, for every asset that joins, what is the perfect number of buyers to ensure that asset gets the level of interest that it demands off a platform like us.
Wow.
And that's the hardest thing about marketplaces, right? You're trying to figure out liquidity.
Damn, so if there's like a ratio and you're like, okay, right now we need more buyers, is there a lever that you can pull? Or if you need more sellers, is there a lever that you can pull? Is there like a list that you can just, by calling everyone on the list, you're going to increase the amount of buyers? Like, how do you pull the levers and balance it? Like,
yeah, that's challenging. You think about what levers you have. You try to assess which of those levers is going to have the short, medium, and long-term impact. You invest there. And yes, in theory, you can hire a sales team big enough to call on every single digital asset in the world if you needed to. But that's probably unlikely to work.
Okay.
So, that's just about being smart business operators. What do you have at your disposal? Is it going to satisfy the needs of your customers in the short, medium, and long term? And then how do you assign the resources to those initiatives?
Interesting. One of the last questions I have is, what triggered or catalyzed Flippa to sort of seek out investors? Like, if they were profitable, bootstrapped, why not continue that rather than say, maybe, I don't know if you guys did, but give up equity to like get investments and churn things up?
I guess the short answer is we recognize that the opportunity is trillions of dollars worth. And so if you've got 600 million digital assets in the world growing every single year, and you have a vision to democratize the exit and enable business ownership for anyone, anywhere, then to achieve that, you raise capital. You don't have to go for that. That's a really, really important conversation that we had and people should have. Bootstrap profitable, sure. Can run the business for another 50 years just the way it was. Grow at 10%, 50% year on year. But if you're going after a very, very big market and you are determined to win, then raising capital is an option, and not for everyone, but we decided to take the option.
Interesting. So for example, let's say someone like me, where I have like a small sort of education company, maybe we only do like $500,000 a year. I'm sort of like, even if I raise like an 1 million, 2 million, 3 million, I wouldn't have the mental capacity to sort of put that money to work and hire people and build out a whole team. Maybe I can just hire a bunch of high level executives and that sort of then reduces the workload. But like, my mental capacities was already capped. How do founders do it? Like, do they just take on money? And I think with where I'm at, for every dollar I spend, I get a huge ROI because I'm really frugal and I know everything inside out. And if I was given $3 million, the ROI on each dollar spent would be drastically less because it's money given to me.
Yeah, look, I think that every business is different, and raising capital for one is not the right solution for another. I think if you've got a business that you are running that is predominantly or is yours, it's paying you a good wage, it's growing, you love it, there's nothing that necessitates global domination, then don't raise capital. When the time comes to sell, if you wanted to sell, whatever you make from that asset is yours. You've got an education platform, you've got engaged customers, you can list that on Flippa, there will be multiple buyers for your asset. You own 100% of it, whether you raised capital or not. You've scaled it. In this case, you've scaled it without raising capital, you own 100%, and when you finally sell it, all of that money is yours. Sounds like a good position to be in.
Yeah, because like what I've learned just talking to you over the last half an hour is like, I just realized, it just clicked with me. It's like, if I stay 100%, I'm going to grow at a much slower pace. And yes, if I do ever exit, I'd be able to make more money. But if my goal is to reach more people, impact more people, grow out the company, like, that's like, I won't, like, in 100 years, I just wouldn't be able to do that on my own. And even if I did a slow and steady flywheel effect and it exponentially grew and I sort of did it all on my own, there's literally no benefit to, like, if I was worth, 100 billion versus 1 billion, if I was 1 billion, I was able to reach the world, like, that might be better. And plus money there's no difference at that point if I had more money. That's something, what's your thoughts, Blake?
I'd be careful about the way you think about it. I mean, I think that it ultimately just comes down to what you're trying to achieve. What do you want? It's your business, it's your domain. Taking investors is a very, very serious decision. They have an influence, whether they say they do or not. They absolutely do. You dilute, so you no longer own 100% of the business you currently own 100% of. The expectations around growth are far more substantial than you would ever put on your own growth endeavors or ambitions. So you're adding weighty expectation where you might not have needed it. raising capital is not for everyone. Raising capital is for a business that has the possibility for infinite scale, in my opinion anyway. And I think that Flippa is a business that has the opportunity for infinite scale. How big is your target addressable market? It's too big to quantify. It's every single digital asset globally. That's our target addressable market. How big is it? It's too big. Whereas that's not the case for every single business. And so there's lots to consider there, but it's a healthy debate.
How big did Flippa get before they considered or even started reaching out to investors? And was that a better decision than just doing investments straight from the beginning?
I don't think you'll ever know whether it was better to just continue to grow it and bootstrap it and grow organically. No way of knowing. Sliding doors moment, right?
Or if I were to rephrase that question, did them building it up on their own bootstrapped give them more leverage when it came to sort of raising funds?
Yeah, I think that it just depends on the investor you talk to, but a lot of investors do like founders who can sweat, and they do like CEOs who can prove that with very little they can grow. Because, frankly, it's not a great executive who can grow a business with crap loads of cash at their disposal. It's a great executive who can grow a business with very little, who can then grow it to be even greater once they have those resources at their disposal. So I think investors, generally speaking, respect and appreciate how hard it is to grow something with not much.
Got it. And I guess when you're making money and you're profitable, that's a much easier sell to when you just have an idea, I guess. Is that true or not really?
Yeah, anyone can have an idea. I've heard lots of great ideas. I'm sure you have too. The issue is whether someone can build something that matters to enough people. And so many ideas are just that.
Got it.
But far more value building something and proving that customers want it.
Yeah. I'm like, out of technical questions, you were able to just smash more. Like, how did you gain this sort of wealth of knowledge? Like, how did you get to sort of where you're here today? Were you always sort of CEOs and executives of many different companies? How did you gain this sort of wealth of knowledge?
Diversity of experience counts for a lot. I've worked in multiple different organizations, and those organizations I've often orientated to different roles, and I've worked for founders. And so founders have a very unique perspective on the way they operate businesses. They're obviously super passionate. I've worked across the publishing industry. I've worked in the travel industry. I've worked for different business models, e-commerce, SaaS, advertising, and now here I am running a success fee-based marketplace. So, I think that diversity of experience can count for a lot.
That's so amazing, Blake. I really appreciate your time today. Where can people learn more from you or learn about you, Flippa, and sort of follow you on your journey?
The best thing to do is, two things. One, just sign up for flippa.com and receive our daily email, and you get a sense of what a good deal looks like as we send through curated deals there. And the second thing is to join our community. So you can join our community on Discord, look for Alts by Flippa on Discord. You can just type that into Google, that will come up. Or otherwise, if you want to join that, you do alts.substack.com, 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 and you'll start to receive some commentary and insight about the space as a whole, and that will help you get on the journey.
Beautiful. Yeah, I'll definitely link everything below. But yeah, thank you so much, Blake, for your time. I really appreciate it. You were able to I was just throwing questions left and right, and you were just shooting them down. Usually it takes 60 to 90 minutes to go through that many questions. My page is filled with questions, and you were able to just shoot them down. So you definitely have wealth of knowledge, and you definitely know what you're doing, and you have diversity in the sales, marketing, and I was asking questions on all different topics, and you knew every single thing inside out. So you definitely know what you're doing, and I really appreciate your time today, Blake.
Thank you, Andy. I appreciate the commentary for sure. Appreciate the line of questions as well, and hopefully it's helpful.
Thank you so much. So yeah, guys, hopefully you guys appreciate this episode. Thank you so much for listening and sort of investing your time to listen to this episode. Hopefully you guys got some value. And yeah, that's another episode of Flipside, and we'll see you guys next week. Peace.